following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
I'll be your host for this segment, Tom Schneider, CMT with NinjaTrader. And on Traders Workshop, we like to bring in our NinjaTrader ecosystem partners. We're bringing back one of our longtime guests here, one of my favorite guests from that part of the world, Jose Blasco, founder of Tradictive. How you doing, Jose?
Hey, everybody. Always a pleasure to be here. Always a joy. Thank you for having me.
Yeah, my pleasure. Great to see you. You're looking good. And, I think it's a great topic we're going to talk about today because it's something we experience all the time as traders. In fact, Jim and I experienced it this very morning on our morning show. So topic being how to find entries. That's a great place to start because that's really where a trade starts, right?
Yeah, definitely. I mean, with a good entry, a precise one, entering as close as possible to the ideal time to enter, you are basically improving in a major way your reward to risk ratio relationship, and the impact in trading is major. So being as precise as possible is critical.
Yeah, exactly. And that precision, you mentioned time. I think that's very key as well, because that's the issue we had today was with timing our trade. We waited because we have this idea in our head. Okay, let's not trade during the open, et cetera, et cetera. And that's a good rule, I think. But sometimes the market doesn't care about your rules, and we missed our entry. But entries we tend to think of as prices as well. That's a big component of it, but there's a time component too. But we can get into that when it's appropriate.
Yeah, definitely. I mean, just like in life, right? It's all about timing. So
Yes.
the entries is basically the timing. That's what it is.
Yep.
So yeah, and many ways to do it. To be honest, like we've said before in prior conversations that we had, there is not one way on how to trade. There are many ways on how to trade and many ways to set your entries. So again, precision is the key component that no matter the techniques, no matter the methods, the more precise we can be, the better. Knowing that, of course, the challenge is that no one knows the future for sure. Therefore, it's all about adding precision in the form of stacking odds in your favor that you're going to be right on that entry, with risk management in place always in case we are not right, and we can get out for a minimized level of pain. But yeah, precision, that's the key.
Exactly. You mentioned probability. I look at that as evidence. How many things can we line up that are in our favor for what we're seeing in the market? And certainly that risk management element is so key. I mean, so many traders, that's like the first thing they mention when they say, somebody asks them, why are you successful? What is the key to success? And it's really not about hitting those big home runs, but it's really about minimizing losses. So the entry is all part of that.
Indeed. Yeah, the other day when I connected here with your show 2 weeks ago, we were talking about being on the right side of the market. Is it time to be long? Is it time to be short? Now, today's conversation is about, okay, so now that it's time to go long, now that it's time to be short, given your methodology. So what is that entry? Where do you click the button? Where do you initiate that trade? That's the conversation that we're having. Absolutely critical.
And I think today is really hard for that first part. So I'd be interested to hear your opinions. On a day like today, where it's just been kind of sideways trading, anticipatory, not a lot of range, very, very difficult, I think, to understand which side of the market to be on when there's no clear motivator to the market and no clear trend going on. So curious to know what you did today, because you did mention that the topic you actually,
Yeah.
employed it today, right?
Yes, yes, absolutely, absolutely. So I am sharing my screen actually. I don't know if the screen is being shared as well among the viewers, but I'd like to share a couple of things. First of all, the market real time and talk about what is it that we have in front of us as we speak, and how I would define an entry. And then on the other hand, just a few minutes ago, as I was coming into the room for today's conversation, actually an opportunity was in front of me. So I actually took a couple of screenshots that will reinforce even more what I wanted to share with the audience today. So I believe that the charts are on the screen, isn't it? Yes, I can see that. So anyway, going back to a bit the conversation that we had a couple of weeks ago. So 15 minutes ago, more or less, I am zooming in here. I'm freezing the screen as well, so nothing is moving while I'm typing on the screen. So we can see that, more or less 15 minutes ago, to be precise, 12 minutes ago, because this is a 15-minute time frame. And as I froze the screen, we still had 3 minutes left for the new candle. So 12 minutes ago, we had a new up climate on the S&P futures. So that, based on, again, the conversation we had 2 weeks ago, that tells me it's time to be a buyer intraday for a move of, ideally a few candles on the 15-minute time frame. Could be a half an hour trade, 1 hour trade, some sort of that type of a move intraday. So that's what I knew 12 minutes ago. So then the question for today is, okay, so where is your entry? Now you want to be a buyer, where are you going to buy, right? And the technology I utilize in my trading is what we call auto UFOs, which I will explain with a bit more detail today. Just to get started, I'll type UFOs and what UFO means, even though I will explain that better in a moment. So UFOs means on-field orders. And when we got this flying saucer, green color flying saucer, green color UFO, that means buy orders. Okay, so that region on the chart, it's where I want to get my entries to go long, where the buy orders are, the ones that have not been filled yet. The ones that have already got filled, they probably already produced some move, but that already happened. I want to position myself where odds suggest on-field orders are waiting to get filled. Buy on-field orders, in this case, is green color, and that's where I want my entry to be. So notice that in order to be precise, as we were mentioning a moment ago, keyword for the day, so I am combining this 15-minute time frame on the bottom part of my screen that told me time to be a buyer based on the tools I utilize. I'm combining that with a 2-minute time frame above, but also I'm using a 2,584 volume chart and a 1,597 tick charts. These, in case someone is wondering, those are Fibonacci numbers. Okay, so I use Fibonacci timeframes for this. It doesn't need to be Fibonacci, but something that I use in a daily basis. So what happens is that we have a UFO located between 41 and 50. In a different time frame, another UFO located between 41 and 50, and 41 and 40. I meant to say, I'm just using the numbers on the right instead of going 5,341, which is long to pronounce. So right. And 41 to 39 as well on a third time frame. So I got, using your word now, Tom, evidence, statistical evidence in this case, of on-field orders to buy in 3 different time frames in a context where AutoClimate told me I should be a buyer. So those would be my entries. But let's get deeper. Apart from having on-field orders on a price chart, which is already powerful by nature, as a trader, I would say quite conservative, or maybe another word to use would be perfectionist. So in that sense, I like to combine multiple tools to help me. So what am I doing here is I'm looking at a 9 EMA from the 15-minute time frame. This is just a moving average. Okay, but notice that, many times price comes to average and bounces from there, either to the upside or to the downside. The average, as we know, is relevant, is a good reference, and many trading systems go either long or short at average prices. So I want to use that average combined with the UFOs. And if you notice, in the time frames above, I have these horizontal lines, which on this chart, I don't on purpose, so I can show everyone how to add that horizontal line and what it is. So what I'm going to do is I'm going to right click on the chart, go for indicators, and find that 9 EMA I mentioned before. So I'm just going to look for EMA on the list of indicators. Okay, and when I double click to add my EMA, notice I have set up my chart with two inputs. That chart, even though it's one chart, has two input series. One, which is my volume chart, 2,584 shares per candle. But I also have the 15-minute time frame. Even though I have it hidden, the data is there. I have added it as an input series. So I'm going to plot a moving average out of the 15-minute time frame. I'm going to plot it on the volume time frame, and I'm going to plot that average as a horizontal line. I know I'm moving fairly fast in the sense that we have limited time.
So when we talk about volume, you're talking about tick volume, not volume of trading, just to be clear. So people at home might be confused about volume. There's a way to create tick charts. We haven't really talked about them in a while. And that's by volume of ticks rather than using a set period of time. What Jose has done is he's put both on the chart, hidden one, but using the other as the input for the moving average.
Correct. Exactly. So then the beauty now when I click OK is that I'm going to have a horizontal line here on this chart, which is the average. If I freeze the screen one more time, this line is showing 5,340.47, which is the average calculation. Oh, I just made a mistake with I didn't make it to move with price. Let me go back to indicators. 1 second. Good one that I made a little mistake because I have the calculation on bar close. I want the calculation on price change. So now that moving average is going to be dynamic. Here we go. And now you can see how that moving average is going to be pointing at the same price as the average I have on the 15-minute time frame. So in other words, if what we're trying to do is we're trying to, from a timing point of view, from an entry point of view, we're waiting for price to come to some sort of an average and from there move, and we want to catch that move, right? So now my reference from below, which is 41.59, I have it here as well, and in the format of a horizontal line, okay? And we can see how that line is actually lining up very nicely with the UFO. In other words, you have the average in a place where not only we have the average which may attract buy orders, we actually already have, thanks to the UFO technology, we already have identified on-field orders in the chart, potential on-field orders, statistically speaking. So the two things combined gives us a statistical edge to set an entry.
Yeah, I like that. So, Jose, just for people who are used to looking at moving average, slightly different. Moving average in an uptrend can act as support. And what you're saying is, well, the 9 period seems to act as good support. If we trade back down to the 9, it might be a good entry point, because that's the topic of this segment, a good entry point. And you know, you're giving yourself a little bit more of a statistical edge because you have evidence, you have that support. But I think what we're not used to, Jose, so I want to clarify, is you're actually showing the latest value in that 9 period moving average, and you're basically translating what the traditional looks like into something that's more order based or trading based, right? You have a horizontal line that's just holding the most recent value, which is a really cool way to do this. I really like that, because you're in order mode, you're in place and entry mode. So it's good to have that horizontal line just showing you the latest value, because that's all we really care about, right? Does the market come down to that level? Well, then if it does, then you can go long there.
Correct. That's exactly what I'm doing. And the idea is to be dynamic. In this case, you know, I mean, the trading style I am demonstrating here, even though it could be other timeframes, of course, and be a bit more passive if you wish. But in this case, I'm demonstrating a trading style which is fairly dynamic intraday. Actually, I took a couple of screenshots, as I said just a few minutes ago, which I'll bring to the screen in a moment. So we see how it looked like before the trade took place. But basically, the trade was buying here, talking about precision, buying here, and this move was caught. So this, we are talking about, 3-point move. So it's a quick in and out. A 3-point move with a 1-point risk. That's like a 3-to-1.
Right.
So now this is a very quick trade that, it took, I don't know, maybe 3 minutes to be in and out. So again, maybe not for everyone from being so active, some that may trigger some trading emotions to maybe less experienced traders. So, but the same application could be done with a little bit larger timeframes. Everything would happen more slowly.
So,
yes,
Jose, I just have a question, because it's interesting how you phrase that. The 3-to-1 ratio, the one tick or the one handle risk is the range of that UFO area, right?
Correct.
Do you have any analysis or is something you've thought of maybe is what's the distribution of those UFOs within that range? So at every tick, so that's 4 ticks, is there more unfilled orders at the top or at the bottom, right? Of that UFO range, is it something that, it makes sense that more of them are at the top, or is it more at the bottom? Is it something that changes, or is it just one of these things like, yeah, most of those UFOs are occurring at the top of the range because they're buys, and that's just the way things happen. So I'm just curious, because when you use that as a range, if you're going long at the top, it just seems like there might be orders below that might need to get filled as well. So you're going to take a lot of heat, or not a lot of heat. You're going to take a little heat just by that nature.
Yeah. So really the key is, it's the first step in this analysis was actually to look at the auto climate on the bottom left. So in my observations, in this case, by collecting market data and then running stats on it, my observations concluded many years ago that when we are dealing with what we call an up climate, meaning when the dot is blue, like what we have now, so the market is moving up, for the ones listening that may not be using auto climate. So let's think about an uptrend. So in an uptrend, what tends to happen is that buy orders are added. So you find great concentration of buy orders, including at pretty high price points. You find good concentration of buy orders. And the key is that you are in an up market condition. So let's call it an uptrend, just to speak a very common language, if you wish. Whereas in a down climate or downtrend, what tends to happen is that the buy orders tend to be canceled. So you need to go extremely low, and low would probably be defined by the statistics of the auto climate, meaning if the market went down very, very low, but it went down slowly, so then it's sustainable, and it may keep going further down, even though it went very low already. As long as it keeps going down at a speed which is sustainable, it could keep going down for a long time. So it's more about the sustainability statistics, which we discussed actually 2 weeks ago. It's more about understanding what is your market condition. Are you in a healthy trend? Are you at the beginning of the trend, in the middle? Are you at the statistical end of the trend, up or down? This is what's going to dictate the most if buy on field orders are being canceled and taken out of the market, or buy orders or sell orders are being added to the market, and therefore you have more odds in your favor. That's why my first step was to look at the color of the dot, if you wish, the climate.
Sure. Good.
Very good. And so I'll bring the screenshots. So this was my screen a few minutes ago. You can see how, maybe I will zoom in, it would be better for everyone to see. So you can see how price was outside of the UFO, the moving average was lining up with the UFO. So we had this reference moving average support, as you mentioned, lining up with those unfilled orders. So 41.5 was my desired price to buy there, given the market condition that was already blue at that moment in time. What you see on the screen is a screenshot, actually. It's not NinjaTrader, it's a screenshot of NinjaTrader.
Right.
And you can see that since it was before the show started, on that chart here, I didn't have the horizontal line because I didn't have it yet. I have inserted the horizontal line manually in front of the audience, just so everybody knows how to do it. But anyway, I was good because I saw the reference there. So my intention here was, okay, so if price comes here, buy, and then from there, likely it's going to bounce. So that was how the trade looked like, talking about precise entries before the trade was executed. And this is how the trade looked like a few minutes after. Maybe I'll zoom in, where then price came to where the UFO was, and then it was moving in that direction. So what was the secret of success here? If I may use the word secret, well, we were in a market condition that was up. Let's call it an uptrend if we want. We had on-field orders to buy at these price points, which is obviously very important, but also we had the reference of a EMA that more often than not, can act as a support. And all those forces combined basically is just adding odds of success for the trade. So this is how it looked like right before I came into the room to be connected with all of you. And if I was to minimize those screenshots and go back to the real-time NinjaTrader platform, so we can see how the move that started here went as high as, almost 45. So it was, a nice, I mean, not the best trade of the year, but it was a nice intraday move in and out with a relatively decent reward to risk ratio for an active, fast style trader to be in and out quickly.
That's great. Question for you, looking to the left,
Yes.
on the chart on the left, the one that's more highlighted, I think it's hard to see from my poor eyes, the 2-minute chart, right?
This one. Yes.
In days like today where the ranges are pretty small, right? I see two areas, two UFOs, long areas. Let's say the auto climate reads exactly how it did earlier. It gave you that signal that it's a buying climate, and you've got these two areas. Could you use both of those areas as entries? So
Yes.
Instead of saying, okay, I'm going to put a tight stop in because I want to be in and out, maybe you want to have a longer term view, and you could say, okay, I'm going to pick up, a position here at 4150. And if it turns around and runs up, that's great. But if it does go back to your lower UFO area, might you add to your position there?
Well, that would not be my trading style and how I would operate it, even though what you said makes a lot of sense. If it's part of the plan to scaling into a trade and have two possible entries with a smaller size each, just in case it doesn't go your way immediately and you need to add more later at a lower price, that's definitely a valid way on how to do it. I like to keep it simple for myself. So what I would do is, if I wanted to play on a little bit of a larger move, something a bit more long-term, so then instead of using a 2-minute chart, maybe I would base my entry on an 8-minute chart or base my entry on a 21-minute chart, that kind of thing.
Sure.
Which would also imply that my climate, instead of a climate of 15 minutes, I would be looking for the 4-hour climate, the 1-hour climate, or even the daily climate to expose myself to market movements, which are longer or longer lasting. Yeah, so it's all, in the end, it's all about the timeframes. Really, in this case, the collection of timeframes I am displaying on the screen now, it's to be quick. If someone wanted to be a bit more passive, very simple. You would, where's my mouse? I just lost my mouse. Okay, here. You would just come in here, and instead of the 15 minutes, maybe you use the 4 hours. And instead of the 2 minutes, you use here the 21 minutes. And now you are shooting for trades that may take a few candles, 4 hours each. So now you're talking about being in the market for an 8-hour trade, 12-hour trade, that kind of thing. If someone wants more, not a problem. You go for the daily time frame, and then you combine that with, for example, the 55-minute time frame. That could be another combination of time frames that make a lot of sense. And you just keep going on the time frames, the less active you want to be, and you keep going down the time frames, the more active you want to be. But the steps or the rationale is the same.
Right.
You look at the climate, you look at your UFO, you look at, in this case, an EMA as a reference. By the way, notice how the UFO is gone, right? So it was here a moment ago, is not anymore, which means that the technology identifies that most of the unfilled has been filled. So there is no statistical edge anymore. So then if I was into this trade, I would just close it and not stay in it, because odds are now that we're gonna have a climate change, and that would mean a stop out. So I would just close it for, I believe this trade maybe was either losing or making, half a point, something like that. You get out and you wait for the climate change. And if the climate changes and you start having red UFOs, then you start shorting using the red UFOs instead of going long with the green UFOs. And you just keep adapting to the market condition with no biases and just trade what the market shows you instead of forcing trades.
Right. No, that's great. And I love the fact that these are available on any time frame, right, to adapt. I think that's really key to any reliable, let's call it reliable, indicator, right, that you can adapt it to any time frame. It's still pulling in kind of the same concept of data, what it's trying to read. So I like that. And yeah, you're looking for the next area to develop for unfilled orders, whether they're short or long, right? I mean, this market could retrace back to what you have down there, 36 and a quarter, and you behave accordingly, if the climate says the same thing it does now.
Correct. Yeah, it's all about
Awesome.
being adaptable, managing your risk. We can see here some red UFO that just appeared that was not here before. So that was the point. I mean, if the green unfilled orders are gone, there is only one reason why buy unfilled orders are gone. It's either because they are canceled or because they are filled. And to fill buy orders, you need sell orders. And if many sell orders came in, which is the reason why you got no more buy orders, guess what? Change of climate may take place, and red UFOs may show up on your screen, which is great because it gives you the opportunity to plan trades on the opposite direction.
Right. No, Jose, this is great. It's been way too fast. We're up against time. Where can people reach you if they want to look more at your indicators?
Yes, well, so we have our website. I think this is the ideal place where to reach us. I will also type on the screen my email address. So our website is, as you can see, is tradewithufos.com, and my email address is Jose. Actually, not the best place where to type here. I'll do it here. So Jose@tradictive.com. In case anyone has questions, happy to help, happy to answer questions, and always a pleasure. And also, given our collaboration, with the NinjaTrader community as well, and talking about helping and supporting traders, serious traders out there. So we also have these coupon codes that could be utilized on our website, where traders can get access to the auto UFOs I've just mentioned, with a 1 month free if they were to subscribe in a monthly basis, or 50% off if they were to subscribe on a yearly basis. So all of this can be seen on the website, and the coupon codes, as we can see on the screen, are Ninja UFOs trial or Ninja UFOs yearly. In any case, if all of this was too fast, an email would do. So Jose@tradictive.com, and we will remind you of the coupon codes if you missed it.
Yeah, this is great. I mean, that yearly, that's 6 months off. That's 6 months free. I love it. But thanks so much again, Jose, for coming on, and we'll do this again in a couple weeks. And I think it's really informative, and hopefully viewers can check out your website and take advantage of what Jose has to offer. But again, Jose, have a great day.
Thank you so much, everyone. A pleasure as always. Thanks for having me.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.